My name is Harpel. I'm CEO and founder of both companies, and today we're going to have a live trading room open to trade stock and options using our technology. For those of you who are new, welcome. If this is your first live event, do me a favor, type in first. Always want to welcome new subscribers. Disclosures are very important. Please read them. Trading stock and options involves risk, not suitable for everyone. If this is the first time you see the slide, I encourage you to visit optionscreen.com to understand the risk considerability associated with trading stock and options. You can always pause the screen if you need more time to read the disclosures. All right, let's take a look at the market. So if you look at our model, stock forecast toolbox, let me see. Okay. The model is actually turning bullish. I don't know, Fred, if that's what you're referring as choppy. Earliest that I have been late in a long time. Okay, Bill, thank you. I've been late before, probably earliest. Yeah, that's true. I like that. All right, but anyway, spiders. I mean, it's turning from bearish to bullish, right? Bias, the trend indicator here, because we've been either overbought and oversold. We've been trading in this range between 675, right? That's the recent this February lows. And all-time highs is about 694. As we approaching the lows, model says, well, you know, unless we break this, and for now it doesn't see any breakdown, then the path of least resistance is to rebound, right? I mean, we have to see it, right? We had a pretty nice rebound on Friday, kind of rolled over towards the end of the session. Again, long weekend, people, I guess, didn't want to hold the risk, and we are basically trading right now in the same range as Friday. So retesting February lows, retesting January lows, retesting December lows, right? 2 standard deviation down, right at the 100-day moving average. That's the green line right here. This is the 100-day simple moving average, and 2 standard deviation move based on historical volatility. VIX is at 22, right? So it's important level. If this level doesn't hold, that opens the door to, I mean, the next level would be probably 6,500. I mean, you have some support of 6,700, 66, but revisiting November, December, October lows. So it makes sense to be cautious, right? And just to see, you know, usually I watch Bitcoin, probably the best proxy, right? If Bitcoin is going to take out 60,000, I would assume it will do that first, and then the equity market will follow. Or I would watch the next culprit has been IGV, right? If IGV takes out the lows, right, the software sector that has been the weakest, then probably the rest of the market will follow. So it's important. Bitcoin is retesting lows, IGV is retesting lows. We'll see if the market holds these levels or not. And again, energy has been a strong sector this year, continues to trade higher. Healthcare has been strong, continues to trade higher. Utilities, sharp rebound in February, continues to trade higher, and consumer staples, sharp rebound on 26. One could argue that they are overbought, and if that's what's holding the market, then market is vulnerable. I mean, it's not just defensive sector, value stocks in general. VTV is, you know, basically at all-time highs. So majority of the stocks are at all-time highs, right? A lot of stocks, maybe not majority, but a lot of value stocks in general. But technology, high beta, has been underperforming. Some of the momentum stocks has been underperforming. We'll see XLF has been oversold, right? Financial sector, brokers, banks oversold, and looks like it's trying to find some support. JP Morgan is bouncing back from the 200-day moving average. Morgan Stanley bouncing off close to 200-day moving average. So we'll see if that will hold or not. For now, value stocks are slightly positive. QQQ slightly negative. Spiders turning flat, right? We have a volatile section. Airlines. So we have a bounce in value stocks, oversold value stocks. So airlines are bouncing back. Telecommunication bouncing back, and transportation. Sorry, transportation, jets, value stocks in general. Small caps are flat. Japan pulling back slightly after rally. Silver continues to also sit on support. I would watch silver as well. If there's a leg down, that it's A, B, C, D, E maybe. Emerging markets slightly lower. Microsoft, Tesla, Google, Nvidia. Nvidia is flat. Apple is up. Apple turning positive. Amazon turning positive. Regional banks bouncing back. USB. I think I wanted to add to USB. Let's do that. Okay, so let's see. First thing first, profit accelerator. So in terms of signals, profit accelerator. So I have industrials, JetQ, Meta, and T-Mobile, and USB. So let's add to USB. Been trading around USB. T-Mobile did not get filled. So that's a new signal. Model picks up for the most part, again, healthcare, like Johnson & Johnson, AT&T, T-Mobile, telecommunication, consumer staples, McDonald's, and Clorox. So T-Mobile, let's see, pretty wide range, unfortunately. Yeah, it's pretty widespread. I'll give it time, maybe it'll get tighter. Okay. But anyway, let's see. So USB, I've been trading, that's a signal, 7 days? Probably more, already. A few more days. So for instance, February 6th, 2 weeks, second week. So I closed it, and now we have a sharp pullback. So I want to add to USB, buy back the shares that I sold. $8.65. So adding back the shares at 58.65, and maybe closed it for maybe 2% would be what, $1.20. So 59, right? 60 would be an overhead resistance, 60 strike. So these specific shares, I would try to close for right below 1560 strike, because that's going to be the overhead resistance, 59.80. 59.80. 59.80. Okay, so bought back the shares that I sold, trying to close it at 59.80. Regional banks, I think still in good shape, but they did pull back the rest of the market. And T-Mobile, let's see, watch list Coinbase, I can remove. And T-Mobile signal over the weekend. Wow, it's rallying. Let's just buy stock at least for now, and then we can worry about the option. T-Mobile buy. I mean 215. I mean right now 220 strike is your support, but I would be either 215 or 10. If it drops, 215 would be what, 3%, 3.5%. I want to be down less than $100, right? So 100 divided by 7 is what? 13 shares, 14, 15 shares. So around 15 shares, right? Maybe $2,000 on $10,000 portfolio. So still pretty large allocation. T-Mobile buy 222. Bid-and-ask spread is also pretty large. 223.05. Both T-Mobile and AT&T were triggered as alert. You can see a strong performance in February, right? Telecommunication after the earnings. How's Verizon doing? Also strong, but they probably already overbought, right? Verizon and AT&T probably already have overbought. T-Mobile looks like doing a catch-up trade, so it might have a little bit more room to go, but I don't think it pays dividends. So if you look for dividend, I don't know, you might want, I know it pays 2% dividend. Okay, it pays 2% dividend. Not too bad. I mean, Verizon pays you more. 6% dividend, right? 6% dividend. So if you don't mind, if you're looking for dividend, maybe Verizon or AT&T, and then you sell calls. I would probably, if I buy stock, maybe sell call spread, especially if you have a larger portfolio. Sell calls because it's probably overbought, and can continue underperform. So those are the trades. T-Mobile, USB, added to USB, initiated T-Mobile, JetQ and Meta. JetQ and Meta together with the software in general are underperforming. I mean, it's not making new lows, right? So one could argue that you could have wave C. So you could have another wave C. I wouldn't call this a bottom, right? You have 3 weeks where we're making lows, or 2 weeks, lower lows, lower highs. I think QQQ is 3 weeks, right? It's doing a little bit better. QQQ is the same. All right, 1, 2, 3. Okay, I mean, we could retest 586. I wouldn't be surprised, but for now I'm holding JetQ because it pays dividend. Meta is weak, but still trading in uptrend, right? This long-term uptrend from all the way from 22, all the way from the bottom of 22 recession, kind of still holding, right? So you can argue that Meta uptrend has not been broken. Microsoft has been, right? If you look at Microsoft stock, same chart, it is broken. I don't know, probably the same thing. Stay corrected. Maybe it's not. It's just deeper pullback than Meta. NVIDIA. Yeah, probably not. Probably not. Okay, so long-term trends from the bottom of 22. NVIDIA is still way to go. Okay. So they're intact. All right, so still holding on to JetQ, Meta, USB, and I did initiate industrials, CARR, right? So industrials have the signals continue to come in. CAR continues to be in strong uptrend. Also doing a catch-up trade, so I like that. A lot of people like these contrarian trades. So for now, I'm still in CAR. So I have industrial, I have telecommunication, trying to stay diversified, regional bank, tech, and those are my positions. I did, for those of you who are not here on Friday, I did close QQQ hedge. Right? I did close QQQ hedge. I've been trading around this position, right? Bought at $1.80, closed 580. Oh no, closed $1.80. Bought at 585. Oh, sorry, it's closed at 583, 580, 600. Sorry, 580, 600. This is the call spread. So bought 580, closed, open again. Sorry, open again at 395. I did close it on Friday, 11 o'clock, 540. Was the idea that market is oversold and the 100-day moving average will probably close to the bottom than we are to the top. That's kind of the thought process, that we're close to the bottom. But we'll see. For now, technology is still underperforming, and value stocks continue to outperform. Small caps continue to underperform as well. Silver under pressure. See silver breaking down. Silver sitting on support. Microsoft, Google, Apple still doing well. So tech continues to underperform. T-Mobile, telecommunication continue to outperform. Let's see what else is there. So software pulling back again. In utilities continue to grind higher. CTA, Clorox. All right, any questions? David, Fade, Fred, Lalit, Larissa, Louis, Mario, Martin, Dr. Simon, Peter, Ted, Bill. Coinbase had earnings, right? It's tightly coupled, right? Highly correlated to the price of Bitcoin. I mean, whether you're trading Bitcoin, Coinbase, or Robinhood, I would say too many O's. Chart looks the same. They're no different. I am bearish on Bitcoin. I think we have not reached the bottom. It's very hard to call the bottom, but I think I would be a seller into the rallies. So my idea is that, I mean, Bitcoin could be 85,000, it could be 100,000, but it's been underperforming equity markets, and I think it's going to continue to underperform equity markets, at least until these long-term, medium-term trends are going to change. Right. So if I type in Coinbase, what does the model say? Short term, I mean, it's still, yeah, Coinbase, despite the rally, it still sees downtrend short term. Long term, it actually, model says that there will be a strong rebound in the next 6 months. I mean, a lot of people would probably agree with the model. I'm more cautious. What does it say? 164. We're right at 164. So model says that it's the bottom. I would say time will tell, right? Watch this low, right? I mean, the good news, Bitcoin is not making lows in the past week. So usually, especially when it's such an oversold condition, there should be a violent rebound, reversion to mean. But for now, I think it will follow the S&P. I think S&P will follow actually Bitcoin. So I would watch the Bitcoin, and for now, I mean, I would not probably close your positions at this point because it's extremely oversold, and you could have violent rebound to 85,000 or 100,000. But I would be a seller into the rallies. So that would be my opinion on Coinbase and Bitcoin. 10 days. I mean, 10 days, if you're a short-term aggressive trader, I would say you can trade anything, right? You can trade anything. I would put a stop loss below 60,000. If we undercut the lows, I would consider exiting if you're doing, short-term trading, right? It could happen by end of the day, right? So your stop loss is 60,000, well, Coinbase, right? Sorry, Coin. Same thing, right? If it's undercut 140, right? If it's undercut 140, especially after earnings such a strong volume, I would exit out, right? So you have $15 to the downside, 10% to the downside. To the upside, I mean, you have potentially, 80 points, right? So you have 15 points to the downside, 80 points to the upside. If you're a short-term aggressive trader and your outlook is 10 days, then yeah, I would say, okay, you can put a small position, make sure that, I'm not down 200, I would not risk more than 1% of my portfolio, right? I would buy maybe 6 shares times 15 would be $90, maybe, 7 shares, right? So I would buy 7 shares, invest, $2,000 out of $10,000 of my portfolio, 20%, 15%, right? And then 2 things will happen. It's either going to break 140 or it's going to get to 220 or at least 200 initially. So that's how I would trade Bitcoin or Coinbase in this specific case. Kind of a short-term aggressive trade. On forecast 10 days, 10 days is bearish, right? Short-term 10-day is bearish, right? It basically says too far, too fast. It doesn't analyze earnings, it doesn't know earnings, but just based on price action, it says 165 is too far. We're going to 145. Right? And we're not going to go much further than 165. That's what the model sees. So if you follow the model strictly, then I would not buy Coinbase. I would short Coinbase. Right? Basically, do the opposite trade. Say if it breaks 165, I would exit my short position, but I would short Coinbase to 140. Let me know if that makes sense. All right. What else? So in terms of weekly power trader, again, industrials, Caterpillar again on the radar. Yeah, utilities, healthcare, consumer staples, McDonald's, Altria, and T-Mobile, right? So Altria, if you want to diversify, last week was Clorox. Sorry, CLX. Right, CLX looks good. Looks like a little bit overbought and pausing, but still strong rebound. McDonald's is in strong rebound. So weekly power trader, pretty defensive posture. Telecommunication, industrials, healthcare, and utilities. Right, Dominion, all overbought. Right, so maybe not. I would maybe not chase these stocks at this levels. Wait for it to, wait for a pullback. Wait for the market to come to you, as opposed to chasing the market. And I think that's in general right now the strategy, buying on pullbacks, right, until we see that markets are finding its footing. We're trading at the session low. Looks like spiders are down, QQQ down, small caps down. So not a good way to start the week. I don't know what positive news can the market expect. And we're already kind of approaching February expiration, which is this week, right? February expiration is this week. So expect more volatility, right? We have VIX expiring on Wednesday, right? Is this the 3rd week? Or am I wrong? Let's just double check that. Yeah, so VIX expiring Wednesday, and equities expiring Friday, right? We have GDP data. We have several presidents, Fed vice chair speak on the economy. FOMC January meeting minutes. I don't think it's going to be anything new. Construction has been pretty poor. So I would say I don't think there's any positive news, but there is expiration. So during expiration, when positions are being open and closed, right, and then dealers have to readjust. That's when volatility could pick up, because we are trading in negative gamma, right? So we're still trading in negative gamma. So that means at any point, if 6,800 doesn't hold, next level is, there's about $8 billion of gamma at 6,800, 4 billion at 6,700, and 2 billion at 6,600. So things could get volatile to the upside or to the downside, right? Just depends. February has about 50 billion. March still has 86 billion. Similar to setup we had in October. Remember, November, December, December had a lot more contracts than November. So that's the setup. For now, it doesn't look like 100-day moving average is holding. We're making new lows. We're probably retesting February and January lows. All right, any questions? Dollars now, okay. Are you short Coinbase or USD? Okay. What's my opinion on gold and silver? I mean, I think silver is in consolidation, right? We're probably not gonna break new highs anytime soon, if I have to guess. But it's gonna be volatile, it's an extremely volatile gonna be set up. I mean, it looks like it's undercutting the lows, right? So I think 60 is the next strike. So there's a lot of position at 60. So put wall, call wall is at 70, right? Gamma flip is at 70. It's trading at 65. So same kind of idea. It's trading in the in a tight range. So 65, you have 30 million contracts, and then you have 60, and not much below 60. So obviously 60, 65 is a very important level, right? So I think it will hold, right? Most of these contracts are actually in March. But if it's not, if it undercuts the 100-day moving average, I mean, it could be 50, 45. So personally, I think 60 will hold, but if the sell-off is going to accelerate because the Bitcoin doesn't hold the lows, because software IGV doesn't hold the lows, then I would expect more downside across the market, not just in and IGV is basically retesting last week low, right? The Friday the 6th, right? 2 weeks low. So we did have a short rebound, and we could, this could be the start of the new wave. So I mean, usually I wait till end of close, right? You do want to go back through your trading plan, review your cash, right? I would say probably having at least 30% of your portfolio in cash makes sense right now. portfolio drawdown, I would revisit that you only have, especially if you're new to trading, 4 positions and you're not down 2.5% account value per positions. If you're already down 10%, I would consider raising cash, maybe put back that QQQ put spread that I closed on Friday. But you know, don't assume that we reached the bottom, right? You cannot. So wait till end of day to rebalance portfolio, right? I wouldn't jump to conclusions now, but you know, we went weak into the closing on Friday. If we're gonna go weak closing into today, then and there's, I don't know what the positive news, earnings is behind us. You know, unemployment is great. Employment data was actually pretty good. Inflation data was pretty good. So if we can rally on good news, usually you sell off, right? So, you know, by the end of the day, if we're weak into closing, then maybe it makes sense. I'll probably put back that QQQ hedge that I had, right? Because it's probably going lower. So yeah, wait till end of day to rebalance portfolio. Just remember, you know, trading psychology. Avoid trading on revenge. Do not chase the trade. Look at the concentration. Make sure you not all your positions in high beta, right? A lot of the, you know, past couple of years, people were conditioned and only high beta technology stocks go higher. Now it's kind of a reverse of this trade. So if your position is highly concentrated in certain sectors, I would diversify. Try not to call the bottom. You know, look for signs of bottoming process. It looks like we are going through the bottoming process because we're not making new lows, but you could have another wave down, right? Because VIX is not in any of the oversold conditions. And you can see interest rates drop it precipitously, right? People are hedging, buying treasuries, kind of a usual risk-off trade where people buying treasuries, selling equities. And VIX is at 22. I mean, it's elevated. We're already at February highs. We've, you know, passed, but we're nowhere October, November highs. So we still have some ways to go to even relative highs from last year, which was, I think, was 28. All right, do we have any more? Yeah, so this, well, we had April. April was 60. Okay. So April we got all the way to 60, but we had, you know, events, tariffs, right? Big, what was it, Liberation Day, day 1, day 2, no, week 1, week 2. So after Liberation Day, the highs were at 28. We're still not there. Ford, my opinion on Ford, it had earnings. General Motors, you can see it's rolling over, right? It's also rolling over. I mean, as we said, all stocks usually trade in hard correlation. If Bitcoin is gonna undercut the lows, if software undercuts the lows, most likely, you know, the rest of the market will follow, right? Even, you know, consumer staples, I mean, they're overbought, right? I don't think they're gonna provide a lot of support for the market because they're overbought, and, you know, at some point it's not enough to keep the market, you know, kind of in this rally mode. So we'll see. Any questions? Any questions on Discord? Happy Tuesday, Ross. Good morning. All right, it's 9:03. Keith will do the closing bell. Keep an eye on closing bell, right? Yesterday, like if you look, or QQQ. Right, into the closing, you know, starting like at 1:30, we did have a sharp pullback, basically gave up all of the gains since the morning session. So I would watch today as well. You know, if we undercut February lows and sell off into the close, and then I would assume, not assume, but, you know, we're probably, I mean, going to 580, right? We're going to 580 at least, get into December lows on QQQ. Any questions? Can you analyze Tesla? Okay, let's look at Tesla. It doesn't look any different from other tech stocks, right? It's down about what? 22%, a little bit better than Microsoft, right? How much? I mean, better than IGV, right? Software companies, average software companies are down, 32%. But I would assume it's gonna same analysis on Bitcoin, same analysis on coin. I mean, on Bitcoin, I'm a lot more bearish because there's really no underlying assets, right? It's just a indicator of supply and demand for certain, thing, right? This technology, or not technology, this is cryptocurrency, right? Which, not widely used. So, I'm more bullish about Tesla than I am about Coinbase long term. But short term, especially if your horizon is again 10 days, I would, if it's a 10-day horizon, then same thing, right? If it's undercuts the lows, I'm out, right? So if it's down, especially 400, there's usually a lot of position at 400 strike, I assume. Right. So that's the largest position right now, right? So the 400. So if it takes out the 400, right? If it takes out 400, I mean, first of all, I wouldn't buy right now. I probably wouldn't short right now either. But if it breaks below 400 and you trade in, then I would say, okay, that's your kind of entry point, and you can ride it till 380, right? If it's undercuts 380, it's going lower. So that would be my thought process. If you look beyond 10 days, yeah, I would say 380. That's my stop level. I would exit if it's 380. And we'll see if bulls can, stage rebound. Any other questions? Let's see what else is here. So it looks like metals and miners, silver going lower. Consumer discretionary is weak, right? So consumer discretionary already at 200-day moving average. Utilities, healthcare continue to outperform. XLK on its way to retest. Industrials are doing better, right? So XLI is still flat. XLF still positive. Energy weak, materials are weak. So you can see strong sectors of kind of also slowly rolling over. Health, home builders. Biotech is getting weak. VIX is at 22. Small caps are doing better, still above 50-day moving average. Apple holding on, Meta making new lows. Then T-Mobile and USB. All right, any questions so far? Martin, what is the 4-day forecast on Coinbase? That's here, 10 days, Coinbase. It basically says a little bit too far, but again, it's earnings. But it says 165 is in the next, it doesn't see momentum beyond 165. And don't be surprised if we get to 140 or 120 level. If the sell-off accelerates, I assume coins could be down 10, 20%. Right? If we take out the lows and Bitcoin drops below 60,000, Coinbase is going to be a, $140 or $120 stock. Does the model know earnings? No. This specific model does not react to earnings. It reacts to the price action of the earnings, right? But it doesn't, it doesn't try to predict the outcomes of the earnings. It sees there is a big gap in earnings, right? That, we did rally, from 154 to 164, right? But for the most part, it doesn't know the quality of the earnings or momentum of the earnings, the specific model. These models do, the longer term models do. Weekly trade and monthly trade does look at the earnings consistency and earnings momentum. All right, any other questions? All right, it's 8:10. Let's watch the closing. Closing would be important. I think that would show you next level, right? We're 6780, right? And that's the 6800. Not much support, right? So 50% retracement. So there's not much support below 6800, right? So if we undercut the lows and close, I don't know, 6750, 6730, then I think, probability of reaching the 200-day moving average is going to increase significantly. All right. But for now, we're still at 50% retracement from the October lows to February highs. So we're right at the 50% retracement. All right, that's all I have for today. Keith will do the closing bell and the morning bell tomorrow, and I will see you at the closing bell. Thank you very much and have a great day.